Welcome back, everyone. As I mentioned this morning, in this next session, my colleagues will explore the strategic priorities that I outlined earlier. They will give you a virtual trip around the world by showcasing some powerful examples and case studies of where we're putting our strategy into action. So back in June, you heard a lot about Scotch globally, and we highlighted Scotch in Latin America. So today, we thought we'd give you a chance to see another example, India, a key growth market where we see exciting opportunities for Scotch. So I will start by introducing you to Hina, our Chief Executive of Diageo India, who unfortunately can't be with us today, but has pre-recorded our first example of how we will continue to drive faster growth in our largest categories.
Hello, everyone. Sorry I can't be in New York City in person, but you will have an opportunity to chat with 3 of my key team members this afternoon. As Deborah said, we are going to be looking into our largest categories and showing you how we're going to get even more growth out of them in the future. So, to start, I will give you some key facts about our largest categories globally. Our top 4 largest categories are Scotch, beer, tequila, and vodka. Together, they represent 62% of our total F23 reported NSV, almost half of reported sales volume in equivalent units, and contributed to F23 organic sales growth by 98%. Scotch alone made up a quarter of our F23 NSV, and tequila overtook vodka in F22. This big 4 have consistently represented more than 50% of the reported NSV over the last 5 years. These are categories made up of iconic brands, including Johnnie Walker, Guinness, Don Julio, and Smirnoff. They are rooted in culture and delivering quality growth. In a moment, I'm going to discuss how we are growing the whiskey category in India, and Dayalan will show you how we are driving global growth in Guinness. India, my home country, is one of the fastest growing and most dynamic economies in the world. It has a large and young consumer base. There is a rising demand for premium products, and the consumer occasions landscape is changing. The demographics in the region present a large opportunity. By 2030, 150 million Indian consumers will enter the legal purchasing age for alcohol, accounting for 25% of the global increase. India's middle class and affluent population is also growing rapidly, creating a strong demand for premium products and experiences. By 2030, India will have 700 million people in this segment. These consumers have higher disposable incomes and are looking for quality, variety, and innovation in their choices of alcohol. The nature of TBA consumption occasions is also changing in India. In the last 5 years, the share of familiar occasions has declined, while the share of socializing occasions has increased from 52% to 66%. This emerging shift offers potential for expanding repertoire, increasing experimentation, and opportunities for new experiences. In this context, India is the largest whiskey market by volume in the world. It has a deep-rooted whiskey culture with a long and rich history of appreciation for whiskey that embraces both domestically produced and imported whiskies. Whiskey is the most valuable category in the TBA market in India, accounting for 52% of the retail sales value. In fact, India is one of the few countries in the world where whiskey is nearly twice the size of beer. Looking specifically at Scotch in India, within whiskey, Scotch accounts for 13% of the total whiskey value in the country. It is the fastest growing and most profitable segment as consumers seek higher quality and more aspirational products. In the last 4 years, there has been massive premiumization in the market, with mid-price segments growing at 10%, primary Scotches at 17%, and imported Scotches growing significantly faster at 32%, while lower price segments are declining at 2%. However, there is still huge headroom to grow, as Scotch penetration is still below 10%. So how did we begin to take advantage of this opportunity? Post-COVID, we took the lead and invested ahead of industry by focusing on our premium and luxury commercial business unit and stepping up on building new marketing capabilities in cultural integration. Our investments are paying off. We have doubled our Scotch NSV over the last 2 years. As a result, our premium and luxury business contributing 31% of total net sales in F23, up from 19% in F19, of which Scotch is 25% in F23, up from 13% in F19. We have recruited 10 million new consumers into Scotch, almost double that of our nearest competitor, and built a strong competitive position in Scotch with close to 50% share in the segment, 1.4 times our nearest competitor. We now have 3 Scotch brands at over 1 million cases, each contributing almost equally to Diageo's overall market share. Johnnie Walker is the most recalled, strongest equity brand in imported Scotches in India, with almost 2x salience and equity of its nearest competitor. 2 other crown jewels in Scotch are Black Dog and Black and White, targeting mixed gender consumption in shared occasions. Broadening our footprint beyond Scotch, I'd now like to introduce you to a local Indian single malt called Godawan. For those in New York, I hope you had the chance to try Godawan last night at dinner. India's young affluent have a newfound pride in their Indian provenance alongside contributing towards a better, sustainable world. Recognizing that these consumers are global natives with an affinity for Indian artisanship and mindful luxury, we crafted Godawan, a luxury-priced artisanal Indian single malt that is proudly Indian, given its provenance in Rajasthan. Godawan has sustainability at its core, working to conserve the great Indian bustard bird, an almost extinct species in the water-stressed state of Rajasthan. I could not be prouder of how this product, Godawan, has had a really strong start in its first year. Its credibility is strong. Our distillery in Alwar is Alliance of Water Stewardship Gold certified, and each bottle we sell contributes to bird conservation. One of the most widely awarded Indian malts, it has won 21 international awards across liquid, packaging, brand building, and design. To mark the first year of Godawan, we launched a limited collector's edition of just 100 bottles, which was pre-sold at $1,000 per bottle to private collectors and clients. Our final whiskey success leveraged our consumer insights capabilities to recruit consumers in new occasions. We saw that bourbon had grown 24% in India in the last 3 years. And we identified an opportunity space in the highest priced segment in Indian whiskey, upper prestige. And so Royal Challenge American Pride was born. It is the first bourbon-based liquid in its segment, marketed with American-style culture imagery that is very aspirational in India. Camper vans, barbecue, outdoors, American pop music, etc. It also pioneers a new packaging innovation, the hipster pocket pack, which contributes almost half of the volumes today because it's convenient, easy to try, and is a great fit for the shared occasion. It has become the fastest growing brand in the industry to hit over 350,000 cases in F23 within a year of launch, adding an incremental over 2 points of market share in the segment, according to our estimates. And 90% of those who tried it repeated their purchase. I'm truly delighted with our performance in India and how we have accelerated growth of whiskey in the region. I'd like to close the India story by sharing a video on Royal Challenge American Pride. Thank you.
Thank you, Ina, and good morning, everyone. I now have the honor and privilege to talk to you about one of our most iconic brands, Guinness. Guinness's unique magic is that it is a global brand with a local heartbeat. It has been loved by vibrant communities all around the world since 1759. And in F23, Guinness delivered its strongest performance ever. We had strong growth in every region across the world, and on a value share basis, Guinness is the #1 beer brand in Ireland and in Nigeria. And something that we are very proud about is that in GB, within the on-trade and on a value share basis, it is the #1 beer brand over the last 12 months. Guinness has a loyal and growing consumer base, and its growth is achieved by following simple and a clear strategy that is built on 3 growth drivers. The first is magnetic purpose in culture. This is about telling authentic stories and taking actions that make Guinness relevant and attractive to both younger and more diverse consumers, whilst also reminding them of the great taste and the quality of Guinness. The second growth driver is inviting experiences. We have a growing network of Guinness brand homes across the world. We have the Guinness Storehouse in Ireland. We have the Open Gate Brewery in Baltimore. The recently opened the Tap Room in Chicago. And in 2025, Guinness Old Brewers Yard is set to open its doors in Covent Gardens. We activate Guinness throughout the year around cultural events in the calendar to keep it top of mind. St. Patrick's Day, of course. But we also activate Guinness around football in the US, rugby in Europe, and we have soccer in Asia and Africa. The last growth driver is beautiful Guinness everywhere. This is about offering a range of products that meet the different consumer needs and ensuring that we are available and accessible in more places and spaces. Guinness never stands still. It is always pushing the boundaries in terms of innovation, and this is why we launched Guinness 0.0. Through consumer research, we have identified that moderation was an opportunity which Guinness innovation could unlock. We created Guinness 0.0 to tap into moderation while staying true to the Guinness heritage and high quality standards. We use data and consumer insights to identify the gap in the market for a non-alcoholic beer that tasted great and had a distinctive flavor. We invested in creating a liquid that met the high standards of Guinness and our consumers, and we were delighted when Esquire magazine named us the king of non-alcoholic beers in January this year. Guinness 0.0 is a breakout growth opportunity for our business. It has been broadened our recruitment potential by appealing to younger, more female, and more ethnically diverse consumers. It has also opened consumption occasions, and Guinness 0.0 is the fastest growing non-alc brand within the off-trade globally. It has added 500,000 incremental consumers to the Guinness brand on a year-on-year basis, and it is also leading our positive drinking agenda, as demonstrated by our responsible drinking campaign for St. Patrick's Day. That's the single biggest day for Guinness consumption on an annual basis. Guinness 0.0 is a clear growth opportunity for our business. It is driving recruitment from a broader consumer demographic. For example, in the UK, 29% of 0.0 drinkers are female when compared to 20% for Guinness Stout. In the US, 44% of Guinness 0.0 drinkers are LPA 34 when compared to 27% for Guinness Stout. And one that we are very excited about as we embark on our global rollout is that 17% of Guinness 0.0 drinkers are Asian Americans when compared to 8% for Guinness Stout. So 0.0 is one of the industry's biggest innovations. In F23 in the US, 0.0 had 3% contribution towards the Guinness brand, but contributed circa 27% to the total Guinness growth. In Great Britain, this contribution was 13%, and 0.0 is the fastest growing non-alcoholic beer, and it has 11.5% share. Looking forward, we see a clear opportunity for us to go deeper and broader with 0.0. We believe our strong brand equity would enable us to grow Guinness 0.0 at scale in our stronghold markets, and we believe we can go even broader than this by finding opportunities in new markets where we believe the liquid would resonate. So we have just seen the great liquid innovations from Guinness. I'm now going to share and talk to you about two exciting technical innovations. We know that consumers around the world want to enjoy Guinness Draught no matter where they are. That's why we created Guinness MicroDraught and NitroSurge. These are both revolutionary technological solutions that enable consumers and outlets to pour a perfect pint of Guinness directly from a can. NitroSurge has launched and scaled in GB and Ireland, and we believe it has unlocked the next wave of transformational growth for the stout category. It is driving premiumization and penetration within the off-trade, and in Ireland, it is also appealing to a younger consumer, where 40% of NitroSurge consumers are LPA 34. We also developed Guinness MicroDraught to bring the magic of Guinness Draught to every corner of the world, with the primary focus in the on-trade. This award-winning cutting-edge technology serves beautiful, fresh Guinness Draught on tap in outlets around the world, no matter what their size is. So you should think of this as a keg in a can, so there's no outlet that is too small. We are confident that both Guinness MicroDraught and NitroSurge will continue to grow the stout category whilst delighting our consumers around the world. So this closes out our first strategic priority. So from Godawan to Guinness, we are accelerating growth in our largest categories. I'm now going to hand over to Christina, John, and Alvaro, and they are going to talk to you about unleashing the power of our portfolio while expanding our footprint worldwide. Thank you.
Thanks, Dayaland. This session is all about how we are going to unleash the power of our portfolio and expand our footprint. Essentially, how do we think globally but act locally? We'll talk about how we leverage these incredible brands that have heritage, history, and global equity, and activate them with executional excellence and pace locally in more markets. We aim to have the right portfolio for the correct occasions in the right geographies across consumer groups, from the newly turned LPA consumer through to the ultra-high net worth individual. I will now show you how we are unleashing the power of our tequila portfolio and expanding our footprint globally. Then John will focus on the luxury opportunity in Asia and how we have expanded our portfolio to win. And then Alvaro will tell you the story of Smirnoff Spicy Tamarind, dreamed up in Mexico and now expanding globally. So, starting with our Diageo tequila portfolio expansion around the world, it's tequila time. We have a strong and diverse portfolio of industry-leading tequila brands that are well-positioned to capture the growing demand for this category around the world. Our tequila brands are not only premium, but they're also versatile and aspirational. Within our luxury portfolio, Don Julio is positioned as the authentic Mexican tequila brand, where Casamigos is positioned as an approachable lifestyle tequila. Our brands appeal to a wide range of consumers and occasions across cultures and markets. They are enjoyed by both males and females equally and can be enjoyed in many different ways, from sipping to mixing, from casual to formal, from day to night. The breadth of our footprint gives us a competitive advantage. As the category grows and evolves, consumers want to experience our brands across different variants and across the price ladder. Our presence in Blanco, Reposado, Añejo, and Cristalino ensures that we are well positioned to participate. At our preliminary results back in August this year, Deborah talked about her desire to take tequila to the four corners of the earth, doing for tequila what Johnnie Walker did for Scotch. And we are excited about making this a reality. Tequila is transcending the US and Mexico and breaking out into the rest of the world. Global tequila category is growing 3 times faster versus international spirits in the last 5 years. It's expanding beyond the USA and Mexico. Over 60 countries grew 50% year on year. And as the category grows, Diageo continues to maintain its leadership, representing 1/4 of global tequila sales with sustained market gains. Don Julio is the #1 selling tequila brand globally as of 2022. And Casamigos is the fastest growing tequila brand amongst the largest 30 brands, growing at 70% in the past 5 years. To show you the reach and impact of our tequila portfolio, I will share you some examples of how we have been activating our range of tequilas globally. I will start by focusing on our recent launch in Southern Europe. Firstly, we identified a number of consumer insights that we believed would be a strong foundation to drive growth. People in Southern Europe are drinking less but better, and super premium spirits are outgrowing total spirits. The aperitivo occasion, where consumers have a drink and a light snack before a meal, is very popular in Southern Europe, and one where we believe that tequila can be positioned to compete. Luxury tequila has doubled in size in Southern Europe over the last year, but some consumers still perceive tequila as a drink for low-quality shots. So we had to overcome that barrier with a new serve that would position our tequilas as a premium, trendy option, simplifying their choice and creating demand by really educating them on our brands. Tequila penetration in Europe is relatively low, but we see it as a great opportunity, and one where we believe we have the right portfolio to disrupt, engage, and win. We are confident that we can harness our global equity and recruit globally at pace. Leveraging of these insights, we identified the cocktail The Paloma as our key strategy to capture the opportunity. The Paloma is a grapefruit-based, refreshing cocktail that is very visually appealing. The Paloma aligns with the local preference for long drinks. It also taps into the global trend of consumers seeking out new and innovative cocktails, as evidenced by its rising popularity. It is the 13th best-selling cocktail in the world, climbing 2 spots in the last year. For the on-trade, the Paloma offers a simple and adaptable serve that can be customized to different tastes and occasions. Casamigos and Don Julio are the ideal choices to lead this strategy. We have launched tequila in more than 15 countries across Europe, including 5 countries in Southern Europe. We plan to drive the Paloma at scale across our European markets in fiscal 24 with both Casamigos and Don Julio. And we have already seen encouraging results. Casamigos is the fastest growing super premium plus tequila in Italy, and our Paloma activations have generated high conversion rates and increased our share of tequila. In Spain, we saw a 60% conversion rate from trial to purchase. And tequila was one of the largest drivers of growth in Southern Europe in fiscal 23, contributed to 20% of the net sales growth. We use consumer insights to inform our strategic approach. We understand what motivates and delights our customers in different markets. As a result, we leverage the power of our tequila portfolio in a different way across Asia. We tapped into the demand for luxury products among Asian consumers and positioned Don Julio 1942 as our super premium tequila as our flagship. We position this variant as an icon of stylish celebrations. 1942 entered the most aspirational on-trade venues, becoming the new luxury brand for high-energy occasions. Across many activations, local influencers and musicians created and shared engaging social content with wide reach. This translated into strong results. Tequila was the fastest growing category in APAC last year. We also launched the new Don Julio 1942 experiential platform across airports to drive recruitment. You may have seen the Heathrow Terminal 5 activation this summer, which drove exceptional brand visibility and engagement to a wide audience. I will now play a short video to show you how we are activating tequila globally, from the Paloma cocktail at après-ski in the Alps to Mediterranean beach clubs, and from Don Julio 1942 in the luxury market of Southeast Asia to global travel outlets. Our brands are creating exceptional activations and experiences that engage consumers and drive brand awareness. I will then hand over to John, who will continue to demonstrate how we're using the power of our portfolio by taking you further into the world of luxury in Asia.
Thanks, Christina. So, to continue the theme of ultra-premium, cool nightlife, trendsetters, and luxury products, I'm going to take you over to Asia, specifically to Greater China and Vietnam. I want to talk to you about the luxury opportunity in APAC and demonstrate how the combination of our approach, along with deep consumer insights, is driving recruitment and delivering quality, sustainable growth. Asia is the largest and fastest growing region for luxury consumption in the world, accounting for 38% of global luxury spend. Now, within that, China is the largest and one of the most important luxury markets, representing 17% of the market today and projected to reach 25% by 2030. In addition, while China is the largest TBA market in the world, international spirits only account for 3% of TBA, and hence we see a very strong runway for growth for luxury spirits in China. And beyond China, we see opportunities for Diageo to grow in the luxury segment across the entire APAC region. We have a deep and nuanced understanding of luxury consumer segments and their evolving preferences and behaviors. In 2022, we launched a study with a whopping 9,000 luxury alcohol shoppers across Greater China and Southeast Asia to segment the luxury alcohol market. Today, we understand more deeply who these consumers are, what matters to them, what they purchase, and how they interact with brands. The luxury consumer is becoming younger, more diverse, and more inclusive. It's shifting from older status cues of establishing wealth by displaying what you own, what assets you have, to a more youthful, diverse, and progressive cues, which places a higher value on experiences, connections, and brands that represent shared values. This creates new opportunities for luxury brands to engage with consumers in a more meaningful and authentic way. We have used our insights to craft our approach on how to win in luxury across the region. We position our brands to win in culture, position them as beacons of desire, create captivating experiences, and aim to execute flawlessly at every touchpoint. We understand the consumer needs and preferences, and we are building our brands from the top. I would now like to bring some examples to life on our approach to driving recruitment, share gains, and net sales growth. In Greater China, within Johnnie Walker, we have shifted our model to build the brand from the top through Johnnie Walker Blue Label. We believe this creates more aspiration for the brand, which drives equity benefits across all the labels in the portfolio, including Johnnie Walker Red and Black Label. Now, Chinese New Year is a key opportunity for us to leverage this strategy. It's the biggest occasion for gifting and celebration in spirits category, representing around a third of annual category value in spirits. Our limited edition Blue Label packs for Chinese New Year are highly sought after, selling at 20% premium to Johnnie Walker Blue Label. On screen, the middle picture is from our latest innovation for the Year of the Dragon. It is a limited edition pack created through our second collaboration with James Jean, the iconic Taiwanese-American artist and cultural pioneer who is very connected in culture. This is part of a series that was created in China, but also distributed globally to the Chinese diaspora, generating over $40 million sales annually. More importantly, you can see how our approach of building Johnnie Walker from the top is successfully driving trial, NSV, and market share across the trademark. Now, let's look at Johnnie Walker beyond China and how the same approach has been implemented in the wider region. Southeast Asia is a fast-growing market with 20 to 25 million new consumers entering the mid to high-income range between 2022 and 2030. And within Southeast Asia, Vietnam is particularly exciting, with almost 100 million people and one of the fastest-growing number of high-net-worth individuals in the region. Again, we are building the trademark from the top. This visual is when we collaborated with the Royal Silverware Craftsmen in Vietnam to make 3 precious Johnnie Walker XR gifts, each retailing at $10,000 each. Our results in Vietnam are outstanding. We have more than doubled our total business market share in 3 years. And our Johnnie Walker luxury portfolio is at the heart of that success, growing 88%. And on top of that, we benefit from the trickle-down effect of equity, growing strongly and winning share in our premium core business, with the total Johnnie Walker trademark, including Black and Red Label, up 57%. Moving beyond blends and into single malts. I'm delighted to say that Mortlach has taken Asia by storm. Now, for those of you who don't know this brand, it is 200 years old, but was only launched in Asia in 2018. Mortlach has a unique distillation process and a beautiful and bold liquid profile, and is positioned right at the top end of our malts portfolio. Now, we have used a tentpole strategy to position Mortlach as a beacon of desire, using high-aged liquids, such as this Mortlach 30-year-old, which you can see on screen, to drive aspiration, adopting an approach of available for the few, desired by the many. Mortlach 30-year-old has a recommended retail price of $4,500, with nearly 2/3 of regional sales taking place in Greater China. And again, you can see the strong trial, NSV, and market share results delivered across the entire Mortlach luxury portfolio within China. Now, staying within single malts, Singleton is our #1 malt in Greater China and leads the market in equity scores like craftsmanship, a crucial metric for Chinese consumers. We believe it's critical to create captivating experiences to drive luxury recruitment. An example of this is with Singleton in China. We brought the brand to life with an exclusive money can't buy experience for key influencers, the Singleton Discovery Tour on the Great Wall of China, which then became compelling content that we amplified across our media ecosystem to reach a wider audience. The Singleton is our leading malt brand in Greater China. The brand is growing and premiumizing rapidly. In fiscal 20, only 10% of the brand was Singleton 15-year-old and above, but thanks to a 47% growth CAGR, now Singleton 15-year-old and above account for over 25% of the total trademark sales. Let me now bring that to life. Luxury cool in action. Staying within Singleton, we're learning that in luxury, leveraging our deep understanding of consumers and occasions and delivering razor-sharp execution, we can unlock and drive transformational growth. The Singleton 13-year-old Golden Trésor in Taiwan is a great example of how we can drive premiumization. Now, for context, Singleton is the #1 malt in Taiwan. Post-COVID, our consumer insights indicated that occasions had shifted from big group and business gatherings, which tend to be high energy in outlet and kind of male dominated, to more lively mixed gender in-home occasions. Wine was making inroads in this new occasion against Scotch. Leveraging this insight, we saw an opportunity to innovate and capture this growing segment with a unique offering, the Singleton 13-year-old Golden Trésor. This is a premium expression of our signature malt finished in Sauterne casks to give it a delicate wine-like finish. It appeals to both new and existing Scotch drinkers and elevates the in-home occasion with its elegant packaging and presentation. This has been a very successful innovation executed through great insight, allowing us to upcharge 40% more with just 1 additional year of aging. Let me now play a short clip to bring this to life in a bit more detail.
The Singleton 13-year golden treasure. A radiant golden malt, finished in Exoturn's wine casks for a honey-glazed smoothness. Filling your gatherings with sweet, radiant joy. The Singleton 13-year golden treasure. Make it shine.
Our approach to win in luxury is driving recruitment, penetration, and share gains. We know this approach drives results, and we're looking to extend our reach in APAC beyond Scotch and go further into exciting new categories like luxury tequila, which you heard from Christina, and also in super premium gin. I'm now going to hand over to Alvaro, who's going to take you to an entirely different world, the story of Smirnoff Spicy Tamarind. Thank you.
Thank you, John. So come join me for a very quick look at the wonderful, colorful world of Smirnoff Spicy Tamarind and its global expansion. The Smirnoff Spicy Tamarind success story began with the creation of a cultural connection through a locally relevant flavor, innovation, and packaging in Mexico, utilizing one of our core brands, Smirnoff. We developed an exceptional product, and once people tried it, they fell in love with the taste. And our job was putting that beautiful liquid on consumer hands. The introduction of this hot and unique flavor profile didn't go unnoticed, as other categories such as Burger King embraced this trend with offerings like the Tamarindo King Burger. The outcomes were outstanding. We successfully recruited 5 million new consumers into the Smirnoff brand, effectively reversing the decline in the vodka category. Notably, many of these new consumers were previously non-spirit drinkers, with our data indicating that spicy tamarind primarily attracted beer drinkers, resulting in a 23% increase in the category. Furthermore, we established a strong commercial emotional connection with the younger consumers, with the brand earning the title of the most loved brand among LPA 24 years old. But we quickly realized that there was a bigger opportunity for spicy tea, as we affectionately call it. Through data tapping into cultural momentum and consumer trends, we identified the global rise of Mexican culture, cuisine, and interest in spicy foods. This enabled us to really define the size of the prize and consumer base and think beyond markets which have large Mexican populations. This was evident by the US rollout of spicy tamarind. Although we initially started in states with a strong Mexican-American population, our hypothesis was confirmed. It is truly for anyone interested in spicy flavors. 75% of people in key markets research identify as spicy enthusiasts. In the US today, in fact, over 41% of total spicy tea volume is coming from non-Hispanic consumers. As an example, in Michigan, a state where nearly 75% of the population identify as white, non-Hispanic, we are seeing a Smirnoff Spicy Tamarind increase both in share and distribution, proving that this is a variant not just for Hispanic consumers. It is really a multicultural offer, 33% of drinkers being white and 8% being African American. And we have not stopped there. Enabled by the credibility of the known and trusted Smirnoff brand, which facilitates confidence in consumer cross-cultural exploration, Smirnoff Spicy Tea will be in 11 countries by the end of fiscal year 24, with further expansion planned for fiscal year 25. It has become the #1 fastest growing flavored vodka in the US. So to summarize, we have demonstrated that whether it is in a beach bar in Greece, a nightclub in Shanghai, or a Mexican house party, we are unleashing the power of our portfolio in an incredible ways. And we are expanding our footprint both into new occasions and new geographies. Now, for the next stop on our trip, I will be handing back over to Christina, who is going to land us in Europe, and then Sally and Claudia, who are going to take us across the pond to the US.
Thanks, Alvaro. Our third strategic growth strategy is innovation to recruit into new occasions. We aim to understand and shape the future of how people across the world will socialize. We use data and technology to ensure that we have our finger on the pulse when it comes to consumer trends today, tomorrow, and into the future. Our team of innovators constantly seek to push the boundaries and create new products, tastes, experiences, platforms, patents, and business models that consumers will love and will create long-term sustainable growth for Diageo. We embrace a test and learn entrepreneurial mindset and aren't afraid to look beyond our own walls to build our expertise, because staying ahead of our consumers demands a radical approach to innovation and no small amount of bravery. To introduce you to our world of innovation, here's a short video. As demonstrated by the video, we could talk all day about innovation, and we only have time for 2 case studies. So I will be talking to you now about the development and growth of our non-alc category, and Sally will be bringing to life our ready-to-serve innovations and why they are so strategically important to us here in the US. Innovation is a strategic growth engine for Diageo. It already delivers scale and sustainable growth across markets and brands. We are a leader on global innovation and over-index in our share of TBA innovation. We are winning share in innovation, and over the last 10 years, we have launched the highest number of innovations on average per year. We have some of the most loved and traditional brands in the industry, and yet we constantly seek to innovate tomorrow's products, to drive relevancy and excitement, and evolve to meet the future needs of consumers. Our non-alc products are doing exactly that. We are leading and shaping the non-alc spirits category. From beer with Guinness 0.0, which Dayalan spoke about earlier, to our spirits brands. The non-alc category is being driven by the growing trend of wellness, and whilst it's still a nascent category, it's growing fast. We believe the category has strong growth potential. It's margin accretive, and it supports our positive drinking ambitions. The non-alc category, spirits, is forecast to grow with a CAGR of 11% over the period 2022 to 2027. Acting on this trend and growth opportunity, we acquired Seedlip via Distill Ventures in 2016 and have created and launched Gordon 0.0, Tanqueray 0.0, and just recently, Captain Morgan 0.0, our first non-alc dark spirit. We hold the leading market share position in the 3 largest non-alc markets globally, UK, USA, and Germany. In Spain and Italy, we hold 67% and 77% respectively, and we are shaping the category. We have a real strength in our liquid expertise. Our liquids are not just moderating alternatives. They are premium drinks that deliver on taste and quality. The taste profile of our non-alc versions matches the taste profile of the trademark. For those of you in New York with us today, we have prepared a range of cocktails drawing from our 0.0 portfolio for you to enjoy at the showcase this afternoon. Our non-alc portfolio has enormous potential to grow across markets and occasions. 80% of Diageo's current non-alc sales comes from only 5 markets. We see a large opportunity for us to drive incremental share and drive recruitment in a broader range of occasions, particularly daytime occasions, where consumers love the experience of a non-alc adult drink. Tanqueray 0.0 is a great example of this, a new moderation option that appeals to many 0.0 drinkers, offering them a more exciting choice than the current default 0.0 beer. In Spain, where Tanqueray 0.0 was first launched, 30% of our volume comes from beer. 7 to 10% comes from non-TBA. I will share you more on how we have achieved this in Spain and also talk you through our strategy in Italy, the home of the aperitivo occasion. The moderation trend is strong in Southern Europe. We identified that 50% of Italian consumers and 40% of Spanish consumers are looking for moderation. We also identified a perception amongst Gen Z consumers that beer was a softer and lighter drink and more socially acceptable to drink in the aperitivo occasion. Leveraging these insights, we tailored strategies for Spain and Italy, targeting the most attractive segments and occasions where we could win share and drive growth. In Spain, we focused on competing in beer-led occasions, as currently non-alc beer products account for 13% of the beer market. We activated our brands around major sports events such as the World Cup and have recently partnered with Atlético de Madrid, one of the most popular football clubs in the country, to connect with fans and increase consumption in watching sports occasions, which has historically been beer territory. In Italy, we positioned Tanqueray 0.0 as the perfect choice for the aperitivo occasion to recruit from aperitif, beer, and wine. And the results speak for themselves. In Spain, Tanqueray 0.0 is the #1 TBA seller on Amazon and the most successful TBA innovation in a decade, according to Nielsen. It accounts for 16% of trademark NSV and has boosted Tanqueray brand by 1.5 points of share since its launch. In Italy, Tanqueray 0.0 is the best-selling spirits innovation in the last year and is shaping the 0.0 gin category with 78% market share. It has also helped us consolidate Tanqueray as the #1 gin brand in the country, growing by 1.2 points of share since its launch. More impressively, around 80% in both countries are consumers new to the brand and new to gin. We're confident that we can replicate this success in other markets. We are not only growing our brands, but also tapping into new consumption occasions, be it daytime, aperitivo, or any occasion where consumers are seeking an adult non-alc drink, hence recruiting new consumers. We aim to be a driving force in non-alcohol, setting standards in innovation, in product quality, and category execution that the rest of the industry follows. Now, we cross the Atlantic to our host market here, where Sally will show you how we are innovating to meet the needs of our consumers for convenience and choice. Sally.
Well, thanks, Christina, and welcome to the US, everyone. I will talk to you about making it simple for more people to share better cocktails more often. Innovation that gets people into new occasions is an incremental growth opportunity in North America. Our brands will be your partner on the journey to discover your inner mixologist. Now, ready-to-serve cocktails make it easy for anyone to offer beautiful, high-quality cocktails at home. And the team and I see a really nice platform here, an attractive space for Diageo to lead. The market potential is massive, bringing together existing ready-to-serve consumers and spirits cocktail drinkers means a potential pool of around 40 million consumers. That's almost 20% of the total LPA drinker population. Now, importantly, the volume in ready-to-serve is incremental to course spirits, over-indexing with younger, female, and more diverse consumers versus total spirits. In occasions where there are cocktail intimidation barriers, like hosting a meal or a party for friends, ready-to-serve cocktails deliver bartender quality serves in an easy and accessible way. Incremental occasions and consumers lead to incremental volume, with 50% of ready-to-serve volume recruited from beer and wine. Now, early data shows that we may have something special here, with the higher price tier of the category growing over 49% in the last year, and we anticipate that trend will continue. So here's how we're delivering on our ambition. Cocktail Collection will be a full line of ready-to-serve cocktails, expanding Diageo's footprint with some of the most popular and complex cocktails in the US today. These outstanding cocktails were developed with bartenders, and they could not be easier to serve at home. Open, pour, serve, and let the hosting accolades roll in. Bulleit Old Fashioned and Manhattan are in the market today, and early feedback is extremely positive. Now, more on that in a second. Espresso Martini, the Cosmo, and the Negroni will bring Ketel One and Tanqueray into the mix just in time for holiday hosting. Diageo is moving decisively into this promising space. Now, the Bulleit case study is a reason to believe. Launched last year, Bulleit Manhattan and Old Fashioned are fast gaining momentum and engagement with diverse, younger consumers. And importantly, these ready-to-serve products recruit new users to the portfolio. So 75% of Bulleit ready-to-serve drinkers are incremental. And then 18% of those who tried Bulleit ready-to-serve then purchased Bulleit whiskey in the 6 months after trying ready-to-serve. So this is a great innovation that recruits consumers into new occasions and then inspires them to buy more by building relationships with our brands. There is a lot to like about this model, and I look forward to sharing more as we write the story of this incremental new platform. Well, we've taken you on a tour around the world, sharing 3 of our 4 key strategies. We've given you global examples of how we're driving to get even more growth out of our largest categories. We're using our global footprint, portfolio, and consumer insights to make sure our brands get into new and exciting places and spaces. And we're innovating to stay ahead of preferences, occasions, pours, and serves to ensure that we stay relevant to the consumers of today and tomorrow. Now, before we dive in to our final strategy to raise the bar on execution, let's go into a Q&A session with all the speakers here in New York. Hello.
All right, thank you.
Okay. So remember, this is number 2 of the Q&A. And once again, we will have one specifically. So Sally will be back up again with Claudia, and we'll have a very specific North America. But if we want to go ahead and open it up for questions.
Vivian. Hi, thank you. Vivian Azer, TD Cowen. We heard a lot during the last segment around all the opportunities to premiumize the portfolio and engage a luxury consumer, which certainly sounds promising. But we've also heard the importance of establishing, a more mainstream price point given economic and consumer volatility. So I was wondering if you could just help us understand kind of the balance of those aspirations, in particular as they relate to your 6% 2030 market share target. Thank you.
Yeah, thanks, Vivian. And I think, what I would say about is we do think that kind of the breadth of the portfolio is very important because when we talk about the premiumization journey, that does look different, sort of across different markets. And so I think it's probably just helpful to just sort of turn it over and to hear a couple different perspectives from some different markets. I don't know if we start with you, John, and then, I don't know, maybe you, Dayan.
Yeah, so look, by and large, we're seeing lots of premiumization globally. There are some pockets where we're seeing some downtrading, right? China is one of those. But here's where to Deborah's point, where the power of the portfolio is really important, right? So I think everyone understands the difficulties of the macroeconomic challenges in China right now. The consumer is very cautious. Despite that, I'm feeling quite good about the performance we're going to post in H1. And that's because we have quite a resilient Baijiu business. You saw that we grew 21% in the last quarter. And we're actually guiding to double-digit growth this quarter. So even within a dynamic where there is downtrading, I think if you've got brands at the sweet spot, which I think number 8 in SGF is, and then into international spirits portfolio, again, sticking with China, because it's a difficult market, right, at the moment, we are seeing consumers trading down, but we're seeing them maybe, say, in Singleton, instead of buying a 15-year-old, they might be buying a 13 or 12. And within Johnnie Walker, we're seeing Johnnie Walker Black Label doing particularly well. So I do think this is where the breadth of the portfolio is important. And so whilst there's a luxury opportunity in Asia, we're not losing sight of the fact that there is a role for premium core to play as a backbone to that.
Dan?
Well, I mean, what I'd add is if I look at Africa, 81% of TBA is beer, and a large part of that is mainstream beer. So if you look at premium beer, which is Guinness, is growing faster than mainstream beer, but spirits is growing faster than beer. And mainstream spirits is growing faster than premium or beer category end to end. So although it is what we'll call a mainstream spirit brand, it's still premiumizing within TBA in Africa. So I think it's premiumizing trends, but within our portfolio, it will still be a mainstream spirit brand. So I think there's room for it across the portfolio.
If I may.
Go ahead, yeah, absolutely.
I think in order to protect this, what is happening with the consumer in this downtrading, we don't have to go to mainstream directly. And I think one of the examples that we have, for example, in Latin America is Johnnie Walker Blonde, which is an innovation that we launched in Latin America, which is a price point between Johnnie Walker Black and Johnnie Walker Red. And the intent of that is protect that downtrading in a way that is accretive to the trademark. So I think we don't have to go back to the preconception around to protect us. We need to go to mainstream because the power of the portfolio and the trademark that we have.
Yeah, that's a great example, Alvaro, because I think this was one we had too much stuff, so we had to cut down the presentation. But actually, Blonde was going to be, I think, one of the great sort of innovations behind and ensuring that we don't take our precious sort of 12-year-old Johnnie Walker Black liquid and feel like we've got to, price that down, because that's the last thing that we want to do. So, what I would say, Vivian, is just sort of we look at the breadth of our portfolio. Clearly, there is a long-term trend toward premiumization, and we're seeing that play out in different markets. We think it's important, though, to ensure that we've got enough balance on that price ladder so that we can follow the consumers wherever they go, and we don't have to do things like discount our aged liquid to try to keep them in the franchise.
Right here.
It's James Edwards-Jones from RBC. The Smirnoff Spicy Tamarind, if I understood it right, that started off as very much a local innovation and then exploded. Could you say a little bit about the mechanics of how that happened, what the sort of process was, the development process that made you realize it would work in lots of other geographies, and also whether there are any other brands or developments that show a similar sort of promise?
Yeah, I think I'll headline it, and then Christina, maybe I'll turn it over to you. I think what's great about that, and I think this is one opportunity where we're good, but we could even be better. And that is, certainly we've got one innovation team that absolutely we share insights. But this is one that if I think about what we could do better, is that we could actually get this out even faster, because this story really, I think, could have unfolded even quicker. So we're teeing it up as one of the places that we actually absolutely see as a success. But I think there is an opportunity for us to do this quicker. And then if you want to just talk about innovation and how some of the things we're doing.
We have, I believe, as I mentioned earlier, we have an incredible stronghold with innovation. Is one of our core, I suppose, assets. We have a phenomenal team. You'll be able to speak to some of them later, that are truly, really grounded around the world. So we can actually do both things. One is to dive into local insights. Smirnoff Spicy Tamarind came out of those local insights in Mexico. And at that time, how that works is you will have an innovation that is geared towards one market in particular. We thought at that time, this is suitable for this market, Mexico. But very quickly, as Alvaro explained earlier, we saw there's more to it than just tamarindo, which is a particular flavor native of a particular region. It actually taps into the spicy food. And spicy foods, guess what, is being popular, more popular in more places around the world. So we have a team that is set up to speak to each other and share those learnings. And as Deborah said, perhaps in that instance, because we thought about it as a local innovation, we took a bit longer than we could have. Having said that, though, we have mechanisms in place where we work with a model of lead market. We work with a lead market to prove one concept, one idea, test it in that place, and then roll it out, scale it later. Sometimes we choose more than one. I think Johnnie Walker Blonde is one example where we chose 6 market tests concurrently because we felt the opportunity is there and we want to be sure that it's prepared to scale. So we will operate in a way that is fit for purpose for the trademark, for the insight, and for the lead market and rollout plans that we've got for those brands.
I think if I could just add one more thing. I mean, one of the things that I have found is really successful in Diageo is the adoption that we have for our technology and data tools. And so when it comes to like consumer insights, these tools are not just a US kind of a thing. These tools have been adopted so broadly across all of the markets in Diageo, and our people are so entrenched in it that we have the ability to get global insights and global analytics around, like, the affinity for spicy foods, as an example, at a global level, to be able to draw these comparisons.
And I think, some of the success is, I think about what some of our more recent things, some of the things that, John, that you presented, the Golden Tresor, and all. So that's actually coming out of, we've invested in a Shanghai innovation hub. So this is one of those things, as Christina's talking about what's around the world, it's not just in our developed markets, but absolutely looking at these insights and what the possibilities are. And so that's something that I think is really already yielding. You got to see some of those today, great results.
Good morning, Vincent Ryan here from Goodbuddy. I have 2 questions, please, around your strategy for the tequila globalization. So firstly, how should we think about the recruitment mix of consumers in the different regions? I appreciate North America, the other recruitment premiumization came from brown spirits and vodka, but how does that mix change in terms of your thoughts around Asia and Europe? And then secondly, just in terms of the long-term strategy, given it's a category where you've had supply constraints historically, how would you prioritize like a 1942 shipment going to Asia versus Europe versus North America, and you're thinking about, I guess, category share and allocation of, I guess, scarce resources?
Yeah.
Well, first of all, we don't have to worry about deciding whether we send it to one or the other. I think we're in pretty good position from a supply perspective. So that's the first thing I'd say. We're going really big on tequila across the world. And the great thing is we're doing it in a synchronized fashion. So whether you turn up in Changi Airport or Heathrow, or you go to London or Ibiza or the party islands of Greece or the ski slopes in Japan, you're going to find 1942 there right now. So I'm really excited about that. It's the kind of global Diageo at its best. We're quite early in the journey, Fintan, but I like the fact that we're going in 1942 centric in Asia, right? We're going in high, building equity from the top. Yes, we'll make the rest of Don Julio available, but 100% of our brand spend is 1942. I'm very encouraged by the traction that we're getting right now in high energy nightclubs, and the source of business anecdotally feels quite significantly incremental. So early days yet, but I'm excited about this. Could be a really strong pillar for us in addition to the Scotch business we have in Asia.
And I think that it's also an important aspect to consider that it will develop differently across different geographies. Hence the point earlier around how we understand data and the insight that we're getting. So we chose the example of Southern Europe because it visualizes how the category is being built around different occasions. And Deborah talked about our focus on occasions earlier. This is a critical enabler to ensure that we tap into the growth opportunity in the right way for each geography. We have a wide portfolio. It's fantastic. The brands Don Julio and Casamigos are phenomenal. They have been built in culture in the US, and that is known elsewhere. I can tell you that the top bartenders of the world are very knowledgeable about these brands. They were really tapping into the scarcity when scarcity was the case, is no longer the case, and they're delighted. So I can tell you that they're preparing these cocktails truly in the top bars around the world, and I'm really excited about the possibility.
And I think just building on that point about clarity on consumer occasions, because we traditionally think about the maturity of the category and then the opportunity. And one of the things that we have learned with tequila brands is the brand transcends the category. And I think that's the beauty of Don Julio and Casamigos, that we don't have to think traditionally, in this way, because it's so trendy and so hot. That it's more about the power of the two brands that we have, more than thinking about the category per se.
And I'll add, even though it started in the US, I think we forget sometimes how young this brand is. Yeah. And it has so much headroom from a brand awareness standpoint just in the US. The penetration of tequila in the US is still 1/3 to 2/3 that of vodka and whiskey. And Casamigos itself delivered 70% of the growth. In fact, over the last 4 years, it delivered more growth than any other spirit in the US.
Not just tequila.
Not just a Diageo. And so, now we've got full supply. We can innovate. So I think you're going to see a lot more growth from the US as well.
Very good. Everyone wants to talk about tequila.
Lawrence.
Hi, Lawrence Wyatt at Barclays. I'd like to continue again on tequila, and then actually have another question on China. When you talk about your Scotch portfolio, a lot of the cocktails that are made typically come from Johnnie Walker Red and Johnnie Walker Black, which retail at around the sort of $20 to $40 a bottle. Yet in your main tequila brands are a bit of a premium to that, yet most of the growth driver is coming from the cocktail occasions. Given that consumers are a bit more financially constrained at the moment, why are you confident that consumers are happy to pay up for products to go into cocktails when they, I guess, historically wouldn't in a category like Scotch?
So as I mentioned earlier, we have really understood the occasions, right? And so there's both cocktails and sipping. In 1942 in particular, that's the way in which it goes. They tend to be launched, and we are really aiming that way, in the high-end places. So I mentioned après-ski in the Alps. You should see the Southern Europe locations this summer. Equally, John spoke about luxury in Asia. Those consumers are seeing that as an affordable luxury. There's something that they can absolutely afford. I'm also sure that as the category develops, we will see further development as we have seen in the US. But frankly, we're in the earlier days of that.
I think the other thing is, we're definitely seeing the consumer more, kind of making choices. And one of the choices that they're clearly making is to spend their time as well as their money on that socializing occasion, which I think is slightly different today than it was maybe, a decade ago. I think we're definitely seeing more of that desire when you go out people want to have a really good time.
Could I just ask one on China, if that's
Yes.
possible?
Yeah.
When we look at the growth rate of the Chinese business since the anti-corruption campaign, it's typically been double digits. But of course, you mentioned that the luxury consumer is becoming younger. That younger demographic is set to shrink by almost a quarter over the next decade. We're already seeing youth unemployment quadruple over the past decade. There's well-documented issues in the real estate markets. When you think forward over the next decade in China, do you think it's reasonable to continue at that same sort of double-digit growth rate?
So, Lawrence, here's how I think about it, right? So you've just listed all the negative macros, which is true about China. But here's what we need to remind ourselves, right? It's the biggest spirits market in the world. It's 3.5 times the size of the US. And international spirits as an entire category is only 3% of that pie. So you got 97% of spirits is huge, it's premiumizing, and we haven't even begun to make inroads into it. Penetration of Scotch in China is only 4%, right? So yes, it would be better if the economy was booming, but we actually don't need the economy booming to go after that 97%. So I'm really excited about the ability to drive penetration, drive trial. I mentioned to you last night, I'm really encouraged by the fact there's over 30 whiskey distilleries being built in China right now. That is going to cause a massive acceleration of penetration. And by the way, we're building a beautiful one, as Deborah said, opening in December. But I think driving penetration of brown spirits and whiskey in particular in China, I think the journey is only just beginning. So that's why I remain, quite bullish on the medium to long term.
And I think, and I'll add to this, I think this is where being in the Baijiu business, I think, has really helped us understand kind of that China market much more so than what.
Sure. Yeah, absolutely, and that's right, Evan. I think by being the only Western company in Baijiu, and Baijiu being so inextricably linked to Chinese culture and food in general, we have tremendous insight. And as I mentioned, I'm quite encouraged by how resilient our Baijiu business has proven to be. And by the way, on our Baijiu business, just another stat, we've only 4% share of super premium Baijiu, right, in China. We have a long way to go within our Baijiu business as well.
Olivier.
Thank you. Olivier Nicolai from Goldman Sachs. A couple of questions for you, Alvaro. Just talking about premiumization and pricing strategy in Latin America for Scotch, effectively. Do you think you took too much pricing in recent years, whether it was on primary Scotch or whether it's on the more premium end of the portfolio, particularly when you compare versus TBA? So you mentioned beer or your other competitors in spirits. And just following up on the destocking comments from this morning on the region again, do you have any idea of the mix within that excess inventories, if it's more on the primary Scotch or if it's more on the very high end, then should we be worried about potentially an impact on margins?
Yeah, okay, so let me start with the first one. So the answer is no. I don't think we took too much pricing, and let me explain you why. Because I think we need to think about the Scotch in the context of Diageo and not just in the context of Latin America, yeah? And Latin American business, our Scotch category was the largest one, but was really based on mainstream and standard, And what the work that we have done during the last 3 years has been reshaping that category. Because we have that liquid gold that we need to protect, not just for the year that we are operating, it's for the next 20 years that we are building in this business. And we understood that we have other brands with our core portfolio that can play that role about making sure that we keep recruiting. That doesn't say that we are not doing that with Scotch. And actually, within the premiumization journey and within the prices that we have been taking, we have been recruiting consumers from out of international spirits. And I think that is the misconception about recruitment, that we think that is just about pricing. And recruitment is about the power for the trademark, the right understanding of the consumer occasion and how you're activating the brands. To the second question about the mix of the stock, as I mentioned before, on the second layer, it's quite difficult to understand what is sitting there. Yeah? My feeling, due to the premiumization journey that we have been taking, that should reflect the portfolio that we have right now. But that is just an anecdotal information because, as I mentioned before, we don't have that level of visibility of that second layer.
I'd add, I mean, we said in the call on Friday, we will come back to you on Friday, Friday. We will come back to you at results. We don't intend to do this every Friday. We'll come back to you at results with more accurate insights on exactly what we're dealing with in Latin America. We just don't want to put something out there now. This was live information. We put it out as we got it. The teams are doing a lot of work to understand exactly what it is, how much it is. We'll come back at results.
Because you'll be able to know, because you're going to see, you're seeing what's being ordered. So we'll be able to get a little more diagnostic, certainly, as we get through this high consumption time of year.
Okay, Robert?
Thank you, Robert Ottenstein, Evercore. I want to dig in a little bit on the ready-to-serve opportunity, and I was wondering if you could kind of help us think through how you're positioning those products in the U.S. versus the High Noons, the White Claws, the Cutwaters, for instance. So in terms of pricing, placement, route to market, occasion, just trying to get a sense of how you're looking at the landscape.
Yeah, I'll start, and then Sally, you can add to it. I mean, so I would say this High Noon Cutwater and some of that really plays at a very different, sort of piece of that convenience occasion than what we're talking about here, which is why we're distinguishing it by calling it sort of ready to serve versus ready to drink, because this really is more about, it is that open pour serve. So, whereas really that high noon occasion, so it really is thinking about occasions is the way I would describe it. So that high noon occasion, quite frankly, a lot of that is coming up from, the beer and the malternatives, things that are in a can, we'll call it. So it is single serve. It is in very different places and kind of what you're doing than what this sort of ready to serve specifically is attacking. That being said, we do think that there is a premiumization journey that's going on, right? If you think back, 3 years ago, when I was sitting in North America, it was all about seltzers, right? And that was, frankly, even cheaper than even where that category is today. So you're seeing FMBs within beer certainly have a lot more heat than what you're seeing on seltzers. You're seeing then, of course, spirit-based cocktails even more so than FMB. So you really do see this consumer premiumization journey. And that's really where on the ready to serve, like for years you've had, what is it, those Jose Cuervo kind of margarita mixes and sort of that type of like ready to pour things that have been out there. We've had Captain Morgan. But once again, that's a very different kind of occasion, kind of based on a party occasion than what we're talking about here. And then I don't know, Sally, if you want to add too, because I know you've been out in market to see how people are merchandising this. And
to your point, right now, consumers are trialing these heavily promoted, undifferentiated seltzers, and we're not going to chase that share. We're going to build our brands, not just borrow from our brands. And so what we've done is really focused on that segment actually of convenience, of ready to drink that is growing. If you look at the numbers, it is the premium, the higher price tier of the segment that's growing. It's growing 49%. And so what we've done is really elevated this new ready to serve market by creating, and by the way, has anyone tasted what you got in your bag last night? Because you got a couple. You got the espresso martini. You might have had too much during dinner, but please try it. So you have a ready to serve espresso martini in your gift bag from last night. And it's spectacular in terms of the liquid. We've done some taste tests here versus homemade, and we can't tell the difference. We've also got Tanqueray entering with a Negroni. We've got Kettle One with a Cosmo, along with the espresso martini. 1 month in, I had a chance to do a bit of a jet tour across the country, taking a look at our programs coming to life. And we had beautiful displays of ready to serve that were just very elevated and really stood out in the market.
Yeah, I mean, look, I think at the end of the day for this, when you think about what happened during COVID, there really was this inner mixologist thing that happened, and people built out their bars and all of this. Now, as people are kind of coming out of that cycle, we developed the taste for cocktails, but whether you're going to have the bitters at home, or I'm going to have the you kind of want it all, but you may not have then all the pieces and parts that you need to really be able to to have the cocktail. So I look at this and go, this is a natural space, an occasion that people are going to go to because you don't have the time, or maybe you don't feel like you have the expertise to make that old-fashioned the way a really great bartender makes it. That of course Bulleit's delivering on that. And now to have Ketel One, always a brand that's known for cocktails and bartenders love it. And so to have that in the espresso martini, which is such a popular cocktail, we really feel like this is sort of taking it into those convenient cocktail occasions that really things like the high noon and seltzers are just playing in it, in a different area.
And just one more thing to reinforce is the incremental consumers that are coming in.
Yeah.
We're getting more multicultural. We're getting females coming into ready to serve. And the most interesting part is that when they try it, there's a portion that then for the first time buy the spirit and buying Bulleit whiskey, which is that's critical.
I mean, that's a really good point too about building our brands on this. As we look at convenience in total, we keep saying we're going after the premium space. We're going after places that we can recruit into our brands, and really, that's where we want to play. That's where we feel like it's our sweet spot. That's our, competitive advantage and our reason to succeed.
I think, and Deborah, if I may, as Sally said, please try them, because the one distinguishing factor is the liquid is spectacular. We have a real asset in our R&D teams, and they have developed fantastic liquids, and in their lives, the key to their success.
Sorry, who's distributing it, and where is it placed ideally in stores? So is it with spirits or somewhere else?
No, with spirits. Although I think, look, this is going to be different in different places because, you're seeing more and more in this space. But I think, most of the liquor stores are actually carving out like a ready to serve. Yes. Sometimes you'll still see it in with the brand, but I think still it's
different.
Yeah, so it is different store to store, which is why getting it on the floor is so critical. So that's great to hear.
Yeah.
I think at this point we'll move to the next session.
Oh, very good. So we have the next session. We're out of time. We will be back to answer more Q&A. Thanks. Thank you. So before the Q&A, we covered 3 of our strategies which will underpin our growth. The 4th strategy is raising the bar on execution. And I want to reemphasize how important this strategy is going to be for us going forward. This is how we will take our strategy to action. So as I've mentioned before, we will do this in our end-to-end operations by working to drive unprecedented productivity across every consumer touch point, from how we understand consumers, how we create demand, and how consumers experience our brands on the shelf and on menus. This is how we will make our scale show up in the marketplace. This strategy applies across the globe to all of our regions, but today we want to show you how it applies to our largest region, North America, where we already have a fantastic portfolio of strong brands. This region, our largest region, is 41% larger by value than it was pre-COVID. and we have increased investment in this market consistently over the past several years. But there is still plenty of room to grow, given we still only have 7.5% market share of US TBA. So we want to continue to raise the bar on execution, go from strong to stronger. And so now I invite Sally and Claudia to discuss the US market as an example of how we will continue to raise the bar on execution.
Well, thank you, Deborah. I think I'll start with the facts that brought me here to the world's leading international spirits company. As you know, the US is one of the largest spirits markets in the world, and we believe Diageo is positioned better than all of our peers. Deborah mentioned the growth in recent years, but it's the growth ahead where I see such strong potential and possibilities. Positive demographics, premiumization trends, and consumer preference for spirits over other TBA categories present such a strong tailwind for growth. Diageo has the scale, the breadth of portfolio, and the depth of talent and capabilities to lead this dynamic market. Our international spirits business is twice as big as the nearest competitor. We have a portfolio of brands that spans consumers, occasions, and categories. And we have the expertise that allows us to meet people where they are, from amateur to aficionado in our categories. This attractive and profitable market is evolving rapidly with ever-changing consumer preferences. And as Deborah said, we've outperformed the market through the last 4 years. So going forward, this is how we'll go from strong to stronger. First, we'll win in whiskey. This is the most dynamic category and is fast growing. We are focusing on our goal of winning in whiskey with Crown Royal, Bulleit, and our Scotch portfolio of Johnnie Walker, Buchanan's, and our single malts. We are currently leading the category in market share, but we know there is so much more opportunity out here. Second, we will continue to broaden and expand our leading tequila portfolio. And then third, we'll innovate to drive recruitment into new occasions. And I'll cover some of these examples showcasing this plan further. And then Claudia will discuss how we'll execute to win smartly and competitively, how we'll leverage data to drive greater agility, greater efficiency, and effectiveness in our media activities, and build on our route to market strength to shape a next generation operating model. But first, let me introduce you to the jewel in the crown of our whiskey portfolio, Crown Jewel.
Crown Royal. Born as a gift for the King and Queen of England in 1939, and still the spirit of generosity 84 years later. Because to us, it's not what you've got, it's what you give. Our bag and our bottle are the most recognizable brand assets in the category, all helping Crown Royal own the throne. The #1 whiskey in North America and the #3 spirit in the US. Our portfolio includes award-winning whiskeys across every growing price point, and our ever-growing consumer base spans Crown Country. These strong foundations will help us build and accelerate our brand into the future. In F24, we're launching a new creative platform, heroing our flagship deluxe variant. Our bold out-of-home and digital will showcase the quality of our liquid, and our 4 new films will celebrate the distinctive qualities of our product. Beyond our flagship deluxe variant, we'll drive whiskey desire throughout our entire portfolio. Regal Apple, the king of the night, Crown Peach, the queen of hosting, not to mention Crown Salted Caramel, and the newest addition to our family, Crown Blackberry. And Crown Royal cans are ready to drink wherever, whenever you like. Our powerful innovation pipeline will grow even stronger, like 30-year-old, our unprecedented, longest aged blend to date. Golden Apple, the most premium flavor experience on the market. And Single Malt, the first of its kind Canadian single malt whiskey. And of course, we'll continue to cut through in culture by putting generosity at the heart of everything we do. giving back to the military, having sent over 1 million purple bag care packages to our brave servicemen and women overseas. As the official whiskey sponsor of the NFL, leveraging this enormous platform to celebrate the hosts who make game day great, and supporting the legends of the rodeo, from its historic origin story to the modern beloved brand it is today. Crown Royal is America's spirit of generosity, and we're confident in taking it to new heights.
Okay, so Crown Royal is our largest whiskey in this strong portfolio. And we must expand Crown's leadership. And we have a plan. We're raising the bar on execution in 3 ways. Consumers have told us that they don't know enough about the brand. So we're investing in a marketing campaign that showcases what makes Crown Royal distinct. It brings to life the smoothness and versatility of this quality liquid across occasions and also showcases our iconic purple bag. Now, the first TV ad just aired last Monday. We're also broadening the footprint of this powerful trademark by continuing to innovate to meet the changing needs and preferences of our consumers, just as you saw in the video. And then to ensure excellence in execution, we are implementing a hyper-localized approach to drive growth. We're using proprietary data and insights to access zip code by zip code to raise the bar of execution at the point of purchase. We're confident that these 3 actions will help us grow this billion-dollar brand to broaden its appeal to more people and more occasions. Now, moving on to tequila. Again, I know that the team has talked a lot in the past about tequila, and Christina shared what we're doing to grow tequila globally. And now I'd like to tell you a little bit more about our exciting new initiatives around tequila in the US. Tequila saw annual growth of just under 20% from 2017 to 2022, and it's projected to be the largest value category within international spirits. And as Christina mentioned, it's going to deliver over 60% of incremental growth for core spirits over the next 5 years. But again, household penetration still remains lower than other categories. We are the #1 tequila player in the US, which positions us well for future growth. And as the category matures, consumers are exploring and expanding their repertoires. So this is leading to growth in the category across a broader range of variants, price points, and new consumption occasions. So we'll be at the forefront of driving growth across these opportunities. Our breadth of variants in Don Julio and Casamigos include Blanco, Reposado, Añejo, and Cristalino. And they provide options for consumers and occasions when they want to explore and demonstrate their knowledge. And we're also actively expanding our participation across the price ladder. First with De Leon, and more recently with Astral and 21 Seeds, growing our options in super premium tequila to access even more occasions. We're also innovating in formats such as Astral Ready to Serve Margarita, which is launching early next year. And we're playing in more serves and occasions. For example, the 21 Seeds spicy jalapeno and cucumber with soda makes an easy to prepare skinny margarita, which I can tell you is simply delicious. Now, our mission is clear: more consumers, more occasions, more serves. And I have confidence that there is so much more to come on the North America tequila growth story at Diageo. So I've just told you how we have innovated in tequila, and I want to give you a couple more examples how we are expanding at pace to capture growth opportunities, including how we're listening and learning and offering relevant options for multicultural consumers, and how we're expanding into incremental occasions with our large trademarks. So first, let me start with one of our biggest innovations last year. Buchanan's Pineapple. It was born from an insight we discovered through social listening. Hispanic consumers were mixing Buchanan's Deluxe with pineapple juice, and they were coining it the Bucanita. Now, building on this, we created a liquid that captured this trend. Buchanan's Pineapple is now the #1 core spirits innovation in the last year, and importantly, it has driven Buchanan's trademark share growth. It's driving new recruitment to both the trademark and the category, and in fact, initial consumer data shows that 80% of these consumers are new to buying Buchanan's within the last year, and 50% of these consumers had not purchased Scotch in the past year. So the next example I'll share with you is just hitting shelves now. And this is an extension of our Bailey's treating strategy. It's built around the 5 delicious C's: chocolate, coffee, ice cream, cake, and of course, cocktails. So we knew that there was an overlap between chocolate consumption and Bailey's, with 98% of US consumers liking chocolate. Now, leveraging this insight and proven platform, the team developed and launched Bailey's Chocolate to deliver a new option in this indulgent occasion. And we're seeing promising signs of success. This will be Bailey's largest innovation launch to date, and it's already gained 13 basis points of share. So we're proud of our ability to identify new opportunities within key occasions and innovate at scale and with speed. Diageo has 6 of the top 10 core spirits innovations in the last 12 months. And importantly, we keep asking, what's next? Now let me hand it over to Claudia to walk us through how we are raising the bar on execution from media to route to market.
Thank you very much, Sally, and hello, everyone. I'd like to now talk to you about how we leverage our data and technology capabilities to reach consumers with relevant messages at the right time and in the right location, so that they're ultimately much more likely to consider purchasing our brands. For that, we bring together multiple pieces of data and AI technology to develop a distinctive and customized media bidding algorithm to reach consumers with. Let me give you an example, and I hope some of you here in New York had an opportunity to see this last evening in the showcase. When analyzing zip code and neighborhood data of our brands, we learned that 2 of our whiskey brands have very different footprints in the key cities and even zip codes within the same state. What you can see here on the screen are the consumer heat maps for Crown Royal and Bulleit in the state of Texas. The darker the color, the higher the demand for the brand. You can clearly see how different they are with very distinct hotspots in the state of Texas. These insights enabled us to pinpoint Crown Royal and Bulleit whiskey consumers in Texas with far greater accuracy, enabling us to make increasingly targeted media decisions. We actioned this across thousands of zip codes in the US, personalizing messages to consumers. And we did this simultaneously at massive scale. Without our digital capabilities, we would have had to hire about 730 people to deliver this. But what's more important, this approach is driving strong results. Targeting our media to the areas where it matters the most led to a 30% increase in effectiveness of our investment. While also raising the bar to get the right brands in the right outlet, always perfectly executed. This has been a priority for Diageo for many, many years. We've pioneered, in fact, many aspects of the US route to market, which has delivered strong results and informed insights as we shape the future of our route to market here. Let me first give you a few examples. It was Diageo who first established dedicated selling divisions with strategic distributor partners, creating a competitive advantage, which has helped us grow this business over the past 2 decades. It was also Diageo who created the first advanced analytics team in the industry utilizing digital image recognition software. This was called Edge, and you will have heard us talk about this in prior investment engagements. This allows us to gain insight into execution in the independent channel and enables targeting the right outlets and pack sizes for our brands based on consumer demographics. We've also learned that specialist selling and activation organizations drive real impact on brand execution and share performance. Back in 2020, when many suppliers pulled back from the on-premise, we leaned in. We invested in specialist resources who partner with bar owners and operators to grow and evolve their business to changing consumer interests. They also provide invaluable consumer insights that strengthen our on-premise programming. And this investment has made a significant difference, with Diageo growing 200 basis points of on-premise share since 2019. And in the accounts covered by our specialists teams, we grew share by 400 basis points. Now, as Deborah said, with our business 41% bigger today by value than pre-COVID, and our growth ambition here in the US, we're also clear that now is the time to shape the next chapter of our route to market and operating model in North America. I'm excited to share with you that we're moving forward at pace with this work, which will mark a true step change in our competitive advantage. We've put in place a dedicated resource here in Diageo, and our distributor partners have as well, so that we shape and implement this transformative approach quickly and effectively. For obvious competitive reasons, I will not cover the specifics of the plan, but I can share with you the end results we're working to achieve with this transformation. First, to help us elevate our category leadership with our distributor partners and retailers. Second, to be able to utilize our vast array of data and move insight to action to invest for growth in key geographies and consumer segments. Third, with this we expect to deliver unmatched execution and activation in stores, bars, and the non-premise. And finally, and most importantly, to enable greater local agility and insight generation. I'm confident that with this transformation, we can raise the bar on execution and our presence in stores and bars to be fitting of our position as the largest US spirits supplier and leader across the key categories that Sally spoke about earlier. And with that, Sally, I'm going to hand it back to you to close us out.
Okay, well, in North America, we are fully focused on raising the bar on execution to set us up for continued success in this next chapter of growth. This is a non-negotiable. To summarize, we'll plan to do this by winning in whiskey, which will be led by Crown Royal, broadening our footprint for tequila's future growth, uncovering new opportunities across diverse occasions for our brands, and innovating with excellence in growth occasions, recruiting the next generation of consumers with particular focus on multicultural consumers and emerging trend spaces. We will be increasingly efficient and effective in our media, as Claudia shared, increasing mental visibility and physical availability. Building on our pioneering US route to market, which will mark a step change in our competitive advantage. So with that, let's open it up for questions.
Oh, you good? Stand. Okay. You've been so disciplined and held off on your North American questions. So now the North American Q&A would be great.
Trevor.
Great. Trevor Sterling from Diageo. Bernstein.
Welcome. Everybody wants to be in Diageo now.
That was 20 years ago.
Do you want to join us on stage?
No, I used to be, but a long time ago.
He's still us.
If I look at North America, you've got 300 bips of extra A&P ratio compared to F19. It's clearly driven an awful lot of growth, but if I look at the very short term, it appears you're losing share. Casamigos has decelerated dramatically. If you look at the public data, it might even be in decline at the moment. Is that gap all down to the deceleration of Casamigos? And what can you do to revive Casamigos? And if you can't revive it, what can you do to fill the gap?
Might be helpful for us to just kind of break down what's going on with the share. And Claudia and I can maybe do this together. So if you look at US share, 60% of it is driven by tequila, Canadian whiskey, and vodka. And there's a few key things that are happening and plans to address it. And that will kind of walk through what is really going on. So first, do you want to start with whiskey?
Yeah. I think if you look at Crown Royal, as Sally mentioned, it has been a big growth driver for us, throughout the last 5 years. We've recruited new consumers with flavors into the category. We've innovated successfully into new occasions with brands like Crown Apple, that is hugely popular with multicultural consumers in the shot occasion. And what we've seen, through the course of the pandemic, that due to some of the supply and glass and material shortages, we had lost some facings on shelf and some visibility in store. So with our focus on route to market, our focus on execution, but also a really exciting innovation pipeline that we have for the second half that Sally mentioned, that include new flavor offerings, which we know will attract new multicultural consumers, but also the innovation in ultra-premium price tiers that will continue to halo onto the entire brand. We know we have a really, really strong plan. We've made progress, Trevor, in the most recent periods. Actually, our declines on Deluxe and Apple have really stabilized. Peach, we're lapping the introduction of some sizes that we introduced last year. Salted caramel, a limited time offer here for the holidays, we're really excited about, and it's driving share growth for us. And we're confident that Blackberry in the second half will continue to take us forward. To link that back to your point on A&P investment, that is one of the absolute investment priorities. Sally mentioned we have a new campaign that went live last week, and also our hyper-local approach, really making sure, leveraging the data that I shared, we understand the hotspots, we invest in those hotspots. All that is investment priority for us. So I think that's the biggest priority from a whiskey standpoint. If I may, I'll just jump into.
Yeah, I was just going to jump in with one fact that sometimes it's easy to forget that Crown Royal is actually bigger. Just that brand is bigger than the entire gin category in the US. So a small change makes a big difference. 2.4 billion in RSV. So just wanted to add that fact.
And then Trevor, I'll come to your Casamigos point, because as Sally said, right, that's the second most important driver for us, certainly of our share performance, over the last few years. First, I would just, a couple of facts, and Sally, you touched on it earlier, with Casamigos. Casamigos grew 70% CAGR over the last few years. It grew 127 basis points of core spirits. That is bigger than any other core spirits that we have seen. Yet the brand, and I know our chief marketing officer is in the background, the unaided awareness of Casamigos compared to leading brands in this category is small. So we see an opportunity to raise that awareness. And now, as we come out of the supply disruptions, that we've had over the past few years, we actually can make those investments and feel confident that they will, connect with more consumers in more occasions. So how do we do that? We now have broadened our size offerings, so larger sizes on Casamigos, smaller sizes on Casamigos, which, by the way, in this period of consumer uncertainty is a really good way to win in the occasions. For larger gatherings, consumers enjoy a larger format because it creates a great value for them. But also when consumers are making choices in terms of how much money to spend, some of the smaller sizes give us access, to that, to an incremental opportunity as well. And for the first time since we've acquired Casamigos, we're now able to innovate. So a couple of months ago, we've introduced the first innovation with Cristalino. And the response has been very, very good from the trade. It gets us back into also the on-premise with an exciting offering. And the combination of all of those plans, Trevor, another investment priority for us to come back to your point on spend, but also gives us confidence that we're going to win in tequila and we're going to take advantage of the headroom that we have.
Correct me if I'm wrong, but I think this is the first holiday season we actually have Casamigos in stock.
In full
all
distribution
sizes.
in all sizes.
Yeah.
That's and correct. With innovation.
That's correct.
With the innovation. That's so exciting. I mean, and I flagged some of these, if you remember at the end of fiscal 23, we said Crown. We also, innovation, really critical. Innovation for us on spirits, that's a second half. So, I think a lot more to come on that. I don't know if you want to talk about some of the innovation that we can talk about, I guess, the stuff that's already out there.
Sure, and I'll close out maybe the third piece of what makes up 60% of the share, because that really kind of deconstructs what is going on with share in the US. The third is vodka. And the good news is on Ketel One, we are actually growing share. The share losses are coming from Ciroc. And what we're finding is that as consumers are expanding their repertoire, they are moving to tequila, to whiskey. And the other thing that's happened this fall is we haven't had, as we have in years past, an innovation, right? A fall innovation. And so the team has been quickly working and is launching Ciroc Limonada, which is very, very cool because it's entering a new day part. It's entering a daytime occasion. So, those are just kind of the three key drivers of the share loss and what we're doing about it. So I hope that helps.
Thank you very much.
Robert?
Robert Ottenstein, Evercore ISI. And maybe the answer to my question is everything you're doing, right? But the question is you're clearly adding what it appears to be a tremendous amount of complexity into the system, right? With all the line extensions and innovation. So how do the distributors deal with that? How do the retailers deal with that? How do you make sure that the main kind of hero brands or the core brands don't lose shelf space, right? The ones that turn the most. And how do you also balance this with the supply chain so that you can keep efficiency with all this complexity that's coming in?
Yeah, let me take part of that and then I'll turn it to you, Claudia. I mean, the one thing to remember on Crown historically, and as we've launched innovation, like these aren't flavors the way you think about like sort of vodka flavors. These really have, this is another one of those places where occasions matter here. So it really is incremental consumers that are coming in to Crown. Part of the reason the brand is so big and has such a broad consumer base is because these flavors have played in a very different way. So, Crown Deluxe versus the Crown Apple, where Crown Apple is more of the shot occasion, and that Crown Peach has played in, tea is so hot right now. So you think about Crown Peach and what you're able to mix, Crown Peach with. And that's why even things like, I remember a couple of years ago when we were short on salted caramel for the holidays, really hit us because it is such a very specific, people look forward to it. I'm not going to say it's like a pumpkin spice latte or something, but it was definitely for the holidays, people look forward to their salted caramel, and it was quite an incremental purchase. So these flavors aren't always, it is really about, we look hard at sort of the occasions. Ciroc is one that certainly always has been driven off of innovation, and we're always just very careful about how we manage that, and over time have also slimmed that so things come out as well as things go in. But I mean, Claudia, you're with the distributors all the time.
Extending, Deborah, your points into your question around how do we communicate those, priorities to distributors, and how are we evolving? We have, as I mentioned, earlier, we have dedicated selling divisions in over half of our markets and over half of our business. What does that mean? Dedicated selling divisions are sales representatives that work for our distributor partners, but they only sell Diageo, and in many markets also Moët Hennessy products. So that by nature, prioritizes them on, the set of brands, that we represent and that Moët Hennessy represents. Now, part of what I'm excited about in the route to market journey that we're embarking upon, and we've been working with our distributors on this, for the past few months, is to really bring our data and their data together to say, where do we see the biggest opportunities for the key growth categories locally, down to the zip code level. And that's where we will jointly invest, Robert, in service to create even more capacity to then unlock the opportunity for growth, but also make sure that, as you say, we raise the bar on execution so that at outlet level, we bring that expertise and help our retail partners merchandise the category, set it to standard, and ultimately grow business for them.
I'd just add on that, Robert, from the supply side of things, we have built a tremendous amount of capability over the last several years to really get a whole lot more disciplined about like one in, one out in some cases. How do we rationalize the SKU portfolio to ensure that as things are being added in, we are also at the same time making sure that things that are not turning quite as fast are being removed. The supply agility program will also help, because it'll help to bring supply closer to the consumer. So these are all parts of the same holistic strategy of being able to grow the business in a very, efficient and effective manner.
Yeah, really, end to end. Because, the one thing, when you think about COVID and just the amount of disruption that had within our supply chain and really being able to deliver all the great insights we had to a very local level, we kind of have all the pieces and parts now, fully functioning in good shape to really be able to string and do this. And that's exactly what Claudia's focused and working on.
Robert Busey. Robert.
Hi, thanks. So I don't think it's a stretch to say that Diageo stock has rarely outperformed when you guys are losing share in the US, so we're all pretty focused on this. Are you guys willing to kind of set expectations for when you think you'll get to share stability in the US market? And then I don't know if there's any comments on that other 40% of the portfolio, things like Captain Morgan, the rum, other categories that maybe you want to make a comment on that you think that'll go back to share stability as well.
Go ahead. Yeah, you can go ahead.
I think I'll address the second part of your question first, and then we'll get to the first part of it. I think, look, at the end of the day, it is one consumer base that we're talking about here. As tequila has grown, as an example, tequila has sourced from every other part of TBA. It's not consumers drinking tequila on top of whatever else they were drinking. So our focus is to be able to grow share of total beverage alcohol at the country, at the regional and the country level. Because, there'll always be times when, something is more popular and growing and something is less popular and growing. Mainstream rum is not hot, right? And so where the beauty of the Diageo portfolio is that we have the full range of products available to us. And so whatever is hot, is where the consumer interest is, we can focus our resources against that part of the portfolio to really grow it. So I wouldn't be that focused on, what's happening to Captain Morgan's share. I think the important question is what's happening to Diageo's share of total beverage alcohol. And that's where I would keep the focus. In terms of putting a specific timeline on getting back to share growth, these things take a bit of time. I mean, the innovation's coming in the second half. We have to do it the right way. What we don't want to do is to go get non-quality share in the short term. And so part of our investment strategy and our innovation strategy is very much about that sustainable share growth. So when you lose innovation for a period of time and you lose those end caps and those display opportunities and phasings, it takes time to get it back, and we would rather get it back the right way than put a timeline against it, chase it, spend a lot of money, and then lose it again.
Yeah, but I would say overall on a TBA basis, we are seeing more, I would say, share stabilization versus share losses.
Yeah.
So that curve is turning, and clearly the plans that they outlined for the second half, we are seeing some green shoots.
And I think maybe just to also, underscore to your point, it is about sustainable quality share growth. John made the point, right? In the US as well, our local teams have that as a qualifier, for what they're focused on, and the sustainability piece is really important. What I will also say is, the reported share only covers certain channels. So what's also, core to our sellout culture is that we win in all the channels, whether they're measured or not. The example I used earlier, on-premise, we do get an on-premise read through NAPCA data, but we also get on-premise information through our distributors. And so the teams that are focused on those channels, they too, are very much focused on beating the competition where they operate. Whether it shows up in share or not, we want to win where the consumer is.
Okay, Heidi.
Hi, I just wanted to follow up on this question because you have really strong brands, really great capabilities, are a leader in digital insight, innovation, and all of that. Can you just explain a bit more how you got into this position where you have been losing market share in U.S. spirits?
Yeah, so we've been gaining market share actually for the past several years.
No, I guess I'm talking about, the
More
last,
recently.
12 months.
So last year we held share of TBA, and I think right now we're tracking minus 20, I think on, and so look, over shorter periods of time, certainly we've talked about some of the issues with some of the product shortages that we had on things like Crown. Frankly, our tequila portfolio, we haven't always had steady supply, and so these things, as you're going through this, you do lose the ability at retail in many cases to be able to do much merchandising or that type of thing. And that is the thing that as we've come back into full supply, really putting our full muscle in all of that. It wasn't that long ago, it was, 18 months ago, that we were still quite short on things because of the glass shortages. We were quite short of supply on several big brands. And so certainly that has hurt us. The other thing that, Claudia, you like to point out as we're looking at this next phase of our route to market is, we're now 41% bigger, and we're still roughly the same size and same organization as we were in
2015.
Yeah. So that's the excitement of what we're building as we look forward. It's not so much fixing things, but it's more about looking to the future and thinking about what we want this business to be and really designing the organization with partnership with our distributor partners and really thinking about that next decade of growth. So it's very exciting. But I would say, look, we look at these as short-term challenges. These are all brands and great brand health. They're big brands. And so we're just excited about the next phase.
At this point, it's time for lunch. So this concludes this Q&A session. Be back here at 1:30, please.